Hello there, Josh Burl from Mastercard here again with a review of activities within Project Inclusion for the month of March. So it's been a busy month, as it always is. We've been crystallising activities around our crypto and financial inclusion project. We've now got a number of interviews with different experts lined up, some already done in actual fact and in the can. Look out for some of these being placed on our social media platforms over the next few weeks. We anticipate maybe a podcast, certainly blogs, and maybe a webinar to follow in respect of this project. In the meantime, we've also been developing plans for our sustainability deep dive. In fact, the Payments Association will be retaining a consultant to bring together a number of different lines of inquiry that we've been thinking about here. Generally, though, what the project will focus on is how to do fintech and sustainability, and how to do it effectively in terms of your supply chain, in terms of how you run your own organisation, but also how to offer products which help your customers act in a more sustainable way. We also anticipate podcasts, blogs, and also possibly a webinar around this one as well. In the meantime, we're also really pleased to have seen our membership significantly increase. Lots of interest in addressing inclusion at this point in time. And this is driving new ideas, not least perhaps something for us to do later on in the year, which will be around international and development inclusion, particularly around cross-border services. That will certainly be a novel thing for us to do. So if any of this sounds of interest, then of course we'd love to have you along. Everything that we do is driven by the interests of our members. So please do get in touch and please come along. Thanks very much indeed.
Hey everyone, it's John Van Bono here, Project Lead for Open Banking at the Payments Association and Director of Research for Tink, Europe's leading open banking platform. As some of you may know, March 2022 has ended up becoming a very important month, with events that are setting the stage for the future development of open banking in the UK. The first event that you may have seen is the CMA's clarification on the definition of sweeping. The clarified definition confirmed that sweeping will allow users to move money between current accounts, but also to move money into independent savings accounts as long as they are held in the same account holder name. Although some TPPs were hoping that it would unlock opportunities to improve treasury and e-commerce use cases, it's fair to say that the clarification did not deviate strongly from the CMA's original scope. Another development is the CMA's long-awaited consultation response regarding the governance of the OBIE. Although the OBIE's transition into a so-called future entity was originally planned for 2021, the CMA has now delayed it further for a transition until 2023. Along with this announcement, the CMA also issued a joint statement together with Her Majesty's Treasury, the Financial Conduct Authority, and the Payment Systems Regulator for the establishment of the Joint Regulatory Oversight Committee. The JROC, as people are calling it, will be responsible for the design of the future entity, and it will be overseeing the efforts that go beyond the CMA's order for open banking from 2017. We believe that the JROC will be there to ensure that the future entity facilitates the development of account-to-account retail transactions, which has already been coined by the PSR as A2ART. At the Payments Association, we are discussing how these developments will allow the payments ecosystem to thrive beyond where we are today. This is why we're kicking off a series of workshops with the CMA and other regulators to discuss how it will impact our current and future business models. The first workshop is planned for Monday, June 6th, where we'll talk about sweeping, and the second workshop will be on June 13th, where we'll discuss the governance of the OBIE and objectives for the future entity. If you want to join these workshops and learn about Project Open Banking, make sure you connect with the Payments Association or feel free to connect with me directly. I look forward to seeing all of you there. Thanks.
Hello, this is an update for March for the Project Financial Crime at the Payments Association. Finally, the Economic Crime Transparency and Enforcement Act was passed on March the 15th, and this made three main changes. First of all, the creation of a public register of beneficial owners of non-UK entities, overseas entities in other words, that buy or own land in the UK. That register is going to be maintained by Companies House. Secondly, unexplained wealth orders have been strengthened. You may recall that there were some difficulties and hurdles in obtaining those orders. And thirdly, the strengthening of the sanctions regime, obviously as a result of the war in Ukraine. Those sanctions can be passed quicker and they can be covered more broadly. Perhaps the current political climate will mean that these new laws will hopefully make a difference, and businesses will be looking more carefully than ever at the reputational risks of where and with whom they do business. There will be a second economic crime bill, which is being proposed before the summer term. This is the government's opportunity to introduce a wider failure to prevent economic crime, which has been something which a lot of people have requested for some time now, and also to make the changes at Companies House, which are envisaged in the white paper, which the government recently published. And those changes will be the biggest reforms to Companies House since its inception. The government has also published its response to organisations relating to digital identities. So organisations which provide digital identity services will need to gain a new trust mark to show they can handle people's identity data in a safe and consistent way. And there's going to be a new office for digital identities and attributes, which will oversee the strong security and privacy standards for digital IDs. Those are both important elements of progress. So people will be able to quickly and easily prove their identity using digital methods instead of having to rely on traditional physical documents. So following the public consultation, the government has made that announcement, and it looks like that's a very positive thing. As you may have read in the white paper on company reform, Companies House is going to be checking the identities of directors, and that's going to come in at a date to be announced. The EU has passed a directive on whistleblowing. The UK wasn't party to that, but the whistleblowing charity Protect has launched a campaign, Let's Fix UK Whistleblowing Law, calling for UK law to be updated so as to preserve the UK's status as a leading example of a country providing comprehensive whistleblowing protection, which isn't the case at the moment. Finally, there is an open mic session on how can smaller regulated firms ensure they comply with AML legislation, which if you're unable to attend that, it's on the 7th of April, then you should look out for the recording. If there are any matters which you think Project Financial Crime should cover, please let me know. Thank you. Bye-bye.
Hello, I'm Brett Carr, a FinTech associate from the law firm Latham & Watkins, and member of the Payments Association Project Regulator Working Group, and this is the monthly update for March. This month saw the return of the hugely successful Pay360 conference organised by the Payments Association. UK Finance, the Payments Association and Latham & Watkins took the opportunity presented by the conference to release their joint report reviewing UK payments regulation. The report explores how existing payments regulation has shaped the ability of sector participants to invest, grow and deliver good outcomes for UK consumers and businesses, and how it may need to adapt to changing structures and demands of the market. In light of ongoing work reviewing how the UK's financial services regulatory framework should adapt, the publication also examines the need for a coherent and consistent regulatory framework across banking and finance. One which provides clarity where regulation overlaps, one that ensures that proportionality, appropriate cost-benefit analysis and responsiveness are embedded at the heart of regulation, and one which empowers regulators to adapt to the fast-moving payment sector whilst enabling and supporting innovation and investment. The report can be found on the websites of UK Finance, the Payments Association and Latham & Watkins. At the start of March, we saw the FCA publish a final notice that it had issued to Barclays Bank plc, fining it in excess of £700,000 for breaching Principle 2 of the FCA's Principles for Businesses. This was as a result of failings in the oversight and monitoring of its business relationship with Premier FX Limited. Barclays also agreed a voluntary payment to customers of Premier FX in excess of £10 million, an amount equivalent to the customer funds seemingly lost by Premier FX. The final notice will be keen reading for all safeguarding banks and payment service providers subject to safeguarding obligations. The market continues to digest the potential impacts in light of the findings set out in the final notice, but PIs and EMIs should likely expect more frequent and rigorous oversight and monitoring by safeguarding banks. A key message, whilst quite an obvious one, is that firms should actually follow their own documented policies and procedures closely, or risk FCA scrutiny. Also this month, we saw the Court of Appeal, in the case of Ria Pargu, dismiss an appeal brought by the FCA relating to the proper construction of the status of funds received by an EMI from electronic money holders under the electronic money regulations in the event of the EMI's insolvency. It was held that the Electronic Money Directive did not require the imposition of a statutory trust, and therefore that EMRs do not impose such a trust. It followed that to fulfil the requirements of the EMD and to interpret the EMRs in conformity with the relevant directives, asset pool in Regulation 24 must be given a wider meaning than merely such funds as have been so safeguarded. The judge agreed with the High Court that asset pool must also include a sum equal to such relevant funds that ought to have been, but have not been, safeguarded. The earlier High Court decision in Ria Pargu had determined that the electronic money regulations did not create a statutory trust in favour of electronic money holders. The FCA was appealing that decision, arguing that the Electronic Money Directive in PSD2 required the EMRs to be construed so that relevant funds were subject to a statutory trust when received by an EMI, and that the proceeds were traceable, whether or not the funds were segregated in the first place or subsequently ceased to be so. It was also confirmed, in the appealed case, that the asset pool, formed on the insolvency and as defined in Regulation 24 of the EMRs, should include a sum equal to any relevant funds that should have been, but were not, safeguarded in accordance with regulations, and that accordingly, electronic money holders had a statutory right to be paid out in priority to all other creditors. Prior to these decisions in Pargu, if insufficient funds had been safeguarded, the electronic money holders ranked merely as unsecured creditors. The decision confirms the reversal of the position from the earlier case of Re Supercapital and will necessitate updates to the FCA's approach document and possibly the negotiation of safeguarding acknowledgement letters between payment service providers and their safeguarding banks. We might also start to see greater diligence of firms safeguarding compliance by their unsecured lenders. All in all, it's been an interesting month in the payment space, with plenty to chew over going into April. Thank you.
Hello, my name's Tom and I am the Project Manager for the Payments Association. I'm here to talk about our newest project, Project Cross Border. Last week we held our first kick-off meeting for the project, and this was an opportunity for our members who are interested in the challenges and technology that come with the cross-border payment space to come together and officially kick off the project. It was great to see so many members with the breadth of experience in this sector in attendance. The purpose of this project is simple: to help identify and increase awareness of the technology in the market that is really transforming the cross-border payments ecosystem for its users and its providers. We'll also be seeking to closely follow the evolving regulatory landscape and thinking about how we can inform it. The project will also seek to align itself with the G20 roadmap to enhance cross-border payments, and we'll also be keeping a very close eye on the Global Payments Forum, which was set up by our sister association, EPA Asia. The next step for this project is to test and confirm the project specification to make sure we've got the objectives, our activities, and our purpose truly agreed across our members. And this specification is going to lay the foundation for the project for the year ahead. So, if you would like to join us on this journey, now is the perfect time, as we're right at the beginning. Please reach out to my colleague Jay for more information. You can reach her at j.bennett, which is BENNETT, @thepaymentsassociation.org. We both look forward to hearing from you.